The median age of home buyers in the U.S. has risen to 59, and the number for first-time home buyers has risen to 40. That leaves a large swath of Gen Z and millennials on the sidelines of the housing market. So my next guest is CEO of a company that developed a blockchain-powered tool that could give those folks an investment track to the real estate market. It's Mogul CEO Alex Blackwood, and he's joining me now in studio. Thanks for being here.
Thanks so much for having me.
So I guess, first of all, let's take a step back, because you're part of this cohort that we're talking about, millennial, I'm guessing.
Yep. Yeah, exactly.
And so, we've been talking a lot, both here in the show and the bigger media and cultural landscape about the affordability crisis when it comes to real estate. So, how do you think about that, and then how to approach it from an investing perspective?
Yeah, the way that I think about this platform is it always needed to exist in some form or fashion. If you see home prices are running away, and real estate is the largest wealth generator for generational wealth within the US. So this needed to happen sooner rather than later to give everyone access to real estate by clicking online. And so that's exactly what we built, as a way for people to invest in real estate as easy as investing in a stock.
And do you find that your users who are investing on the platform, do they own their own homes, or is this a way, are they seeing this as a vehicle to eventually build up enough assets to then buy a home? Are they renters who are investing in real estate?
So when we first started out, we thought we'd be the Robin Hood for real estate, with the idea being that anyone can access high quality single family rental homes. But then our returns started to speak for themselves, and our average return right now is about 18%, and that just goes back to our backgrounds. We were both at Goldman Sachs, myself and co-founder, where we were investing billions on behalf of the institution. And so today, the way that it works is a large majority of our investors are actually people that own their own homes or own multiple homes, and are coming to us because they see an easier, more headache-free way to invest. Now, the average allocation to a per property basis is around anywhere from 15 to 25K per property.
Okay, so let's talk a little bit more about how it works, right? So we were talking during the break, you guys own around 40 properties. I think you said 42 properties.
Yep. Yeah.
And as you mentioned, they're single family homes, and you're owning them and managing them and renting them out. Is that how it works?
Yeah, so the way I describe Mogul, it is the greatest way to invest in real estate. And so the idea being that Mogul came about because myself and co-founder, when we were both at Goldman Sachs, we were looking at ways to invest in that high quality asset outside of our day jobs. We didn't really see any platforms that allowed for it, and so we decided to build our own. And the idea being that you go on to mogul.club and you pick and choose from highly vetted assets that are the highest quality of assets, and then as you invest in that asset, you get monthly rental income, appreciation, and tax benefits in real time. For instance, we pay out monthly rental income for October tomorrow. And so you can start investing and start earning right away.
You make it sound very easy. It's not easy to find a house to buy, the right market rate at which to set it, to collect the rent on time. What surprised you through this process? Have you found those points of friction maybe that you didn't expect?
I think there are always going to be points of friction, especially within the traditional brick and mortar real asset class. However, that's where we come in. We bring our expertise to make it easy for anyone to invest while we take care of the headache. So there aren't going to be the 3 a.m. tenant calls. There aren't going to be the dealing with the leaky faucet at 1 a.m. And so we actually deal with the property managers, and anything that's below $1,000 in spend, we take care of. Anything that's above $1,000 in spend, the individual gets to actually vote in a simplistic manner, governance rights on the individual asset.
Oh, interesting. Okay, and if somebody comes to your platform, they're not just investing in a big fund that buys these houses. They actually choose the specific home that they're investing in?
Yep, yeah. We built it so that you would have the autonomy to choose the assets, but we like to say it's kind of like shooting fish in a barrel, because we've already pre-vetted the assets, and hell, I even invest in each individual asset that comes to the platform. So people can pick and choose. They can do weighted dollar cost averaging, or they can just pick one specific asset type.
We have seen an increase in the types of platforms like this, not necessarily this specific one, but sort of more accessibility to investing in real estate, whether it's commercial or residential. Is that the way that you think things are going in sort of bigger picture?
So bigger picture, I do think there are going to be a greater proliferation of these types of platforms. However, I liken it to the early days of social media. If you look at MySpace, it was quickly usurped by Facebook, which is a more quality platform. Now, the initial cohort of platforms that came to business, I mean, the returns on there, I don't want to speak ill will, but it's ones that we initially looked at and said we need to create our own platform to build out. And so I do think that eventually there will become more and more quality players in the space, and we aim to be the first quality and transparent platform for real estate investors.
Alex, thanks for coming in.
Thank you so much for having me.